So if you ask me, right, will you want to put our time of 5 years, which one will be a better approach?
So the big question is this: how busy professionals and homeowners like us make six-figure profits from the property we own safely by doing it with research, data, and numbers. How do we buy in a way without complications and half-guessing, regardless of the market conditions, and still remain profitable? That is the question. Here, I will share with you exactly what we do and how we do it. My name is Edmund, and welcome to Singapore Real Estate Insider.
So now I'm giving an example. If let's say the property just increased 1% per annum, 5% over 5 years. Okay, 1% is very little per year. So I'm using a very conservative, very low margin. Even our inflation is about 3% right now. Okay, so because of its 1%, so technically your property also increased by $50,000 over the next 5 years. Right? So what we did was we calculate whatever expenses, income, how much rental you get, and we came out the equity basically is about 54%. Alright, equity means how much cash have I used. Let me just give you a quick summary of how much we actually get. Alright, so this is the total. 274,600 is our equity. This is the amount of money we come out from our own pocket, our own CPF, and we pay for this property. And so when we calculate the rate of equity over 5 years, so you can imagine if let's say we divide this by 5, we're talking about 10.8% per annum. Is it better than any freaking banks out there? Alright, so if we start looking at this like an investment, okay, then you will tell me, my stocks I can get 20%, wow, my REITs, my blue chip I can get 30%. But wouldn't that also be very risky? What we're offering here in terms of this concept is that it's a very safe brick-and-mortar asset. No matter what happens in the entire economy, your property value cannot go back to zero. A property is always a mechanism to hedge over inflation. So if inflation is at 3%, meaning your property prices should go up by 3% every single year. Right? So this one we are just using an example of just 1%. 1% every single year, meaning in the end of 5 years, you'll make 5%, which is $50,000. So today, if this is a bank and you put 274K into this bank, and how much is the interest rate right now? Comfortably even if you can get quite good, we're talking about 1%, right? Minimum at 1%. After 5 years, this is the amount that you get, 13,700. Versus if you put into your property, you're still using the same amount, 274, and because the property appreciates, right? Not only just in terms of the 1% every single year, which is very minimum with 1% growth. At the end of it, you will get 102K, which is your principal, whereas you also have 50,000 in terms of your profit, and your net is 152K. Estimate lah. Alright, so like I said, we are not going to go drive in too much into the numbers, but this is just an estimate. So if you ask me, right, will you want to put our time of 5 years, which one will be a better approach? I put in the bank, it's safe, yes. Returns small, of course, but isn't a property also safe if you just buy and then you own stay yourself? So later on, after 5 years, instead of just 13,000, you're able to actually achieve 150,000 back into your own pocket. Alright, so this is something that I want to give you guys a quick heads up, because a lot of us, we forgot that the principle is also what we have been doing to save our money inside our property.